We have Greg in St. Albert, Alberta, about a gold company that has been hit pretty hard the last several sessions. Here's Greg. Go ahead, sir.
Hi, David. I admire your work, and I had a question. This is based on a top pick that you made in September for Sandstorm Gold that got hammered, down 12% today. So it's right up around where you made it a top pick at about $11. So I was just wondering, in light of your comments, would you get out right now and put it into something safer, or do you like the fundamentals of the company, and would you continue to hold at this level?
Sure.
I'll wait for your answer.
Great question, Greg. So through September and October, the gold producers really were one of the strongest groups in the market, and certainly the stocks were outperforming the metal, and certainly we got a pretty good lift in the Sandstorm. I think that given what's happened in the shift that's taking place over the last couple of weeks, the thing you have to remember is that in this market we've been in over the last while, many of the higher beta sectors have been the playground of the hedge fund. And given the volatility that we've seen, very quickly when that happens, golds often get hit. So given the fact that we are seeing some deterioration in our risk models market-wise, we've pulled in our horns on the golds. And in fact, we sold some Sandstorm over the last couple of days. And it came very, very quickly, this pullback. I think that there's a lesson to take away from this, though, right now. There is not a solid bid under the market in some of the higher beta securities. We're in a market where a lot of typical long-only investors are really not that engaged. And so I think pullbacks can be relatively sharp if you're not focused in the area that the majority of investors are looking at right now, which tends to be, the yield-driven sectors. So I think you have to be a little bit careful. We've chosen to pull in our horns on it. I'm always a big believer in identifying what's working and being there, so long as there's fundamental characteristics that support the view and price supports your view. When price starts to behave in a way that doesn't make sense given what you think you have to be prepared to step back. And I think in this market, I think it's going to be very important to be a good seller. So we're bound to get some bounces. Market's been rough over the last couple of weeks, but I think the fact is there's several sectors that have some risk to them right now, and you want to be mindful of that.
Did you have some trailing stops on Sandstorm, or were they blown through?
So we run stops on all of our positions, and as they start to get close to our exit prices, we start to take positions off. Over the last I guess about 3 weeks, we've been reducing and taking some gains on some of the golds. So it's a relatively smaller piece of our portfolio today. But, you have to remember in the market that we're in, if you've watched Canadian equity market over the last 2 years, there have been a series of rallies that have failed, and you really have had to be more active in picking your spots, which is tougher, for a private investor who's not doing this all day long.
Right, exactly. Okay, that's a gold streamer. Now we have a silver streamer. Linda's in Toronto with a question on the silver wheaton. Go ahead, Linda.
Hi. I'd like to know for silver wheaton, is today a good day to buy? It's for a very short-term trade. Thank you.
Right. Well, I have to tell you, we do believe that we've gone through a shift in this market. And I would prefer to tell you that you should be probably selling rallies as opposed to buying dips. If you look at where silver wheaton's come from, it's come from $20, really since June of this year, and rolled over and broken some support. So I would suggest really in most of these companies you'd be a better seller than a buyer.
And just looking at silver wheaton, we see it more so in the 1 year, but hit a certain level, got around 40, and just kind of went sideways for several weeks. Is that often sort of a bad sign if it can't get to a higher high?
No, not necessarily. When stocks have a good run and they consolidate for a period of time, prices can consolidate either in time or in price. And in this case, it consolidated over, well, I guess September and October, and then ultimately has broken down. But this wasn't in a vacuum. If you watched it, in the last 6-8 weeks, semiconductors have underperformed the market, transports have underperformed the market, materials have been underperforming the market. So it's been marked deterioration underneath the surface of the index, which is one of the things that we watch for to cause us to pull in our horns. But certainly stops are important, and you got to be prepared to follow them.
And indeed, a lot of those precious metals had similar movement. The likes of First Majestic, Franco-Nevada, they all sort of did the same thing in a way. Here's an email on Canadian oil sands. This is from Kelly in White Rock, BC. Do you think Canadian oil sands can maintain its current dividend? We got a question about this last night. The guest was not that enthused about the company.
Yeah, I think that you want to be a little bit careful of the oil sands producers. I think that there is certainly risk in their pricing. We prefer and have preferred and have talked about this now for months to be focused on the energy infrastructure companies as opposed to the energy producers, because they're just more focused on volume growth than pricing. So, you know, given the fact that in the 3-year rally we've had off the lows of 2009, oil sands is barely above where it was at the worst point in 2009. This is not a leading company in the group, and I think that there's better places to get dividend growth elsewhere. And we'll talk about one this evening.
Right, yeah, you have a pipeline as one of your top picks. We'll talk more about that later. Here's Nancy in Windsor, Ontario. Hi, Nancy.
Hi, guys. I did call to ask about Molycorp, but what I'd like to really know is what would you be looking for in a rare earth company? The one I really like is Great Western, and they seem to have all their ducks in a row. And what would it take for you to buy them? Thank you.
I have to say, Nancy, it would take an awful lot. We have virtually a 0% weight in basic materials right now. We're not bottom fishers, and I think that this is not the time to do that. At a time when, you know, economic growth is challenged and the pricing is just not there, this is one of the weakest performing groups in the market. I think that there's real risk in them. There's better people to ask about bottom fishing than us. Our job is to identify sectors that are in favor now, where there's positive fundamental characteristics and there's deterioration in this group. I'd be cautious.
Right, multi-year low on Molycorp, and there's the SEC investigation as well into the company's accounting. We'll take a short break here. We'll come right back with David Burrows, and he will continue to answer your questions on North American large caps.